altcoin season just got a lot stronger as the Trump administration and the Federal Reserve and the Genius Act, they just created a way to where they can print money without people knowing, and it's incentivizing a lot of liquidity to come back in crypto. So in this video, I'm going to explain that. But per usual, I'm going to give you guys my weekly macro update. As you can see, I'm finally back at home in my studio from being in Europe over 3 months. So it's good to be back. So let's jump straight into it, and definitely stick around to the end of the video because what I'm going to cover is actually wildly insane. So first, we're going to start with the crypto fear and greed index. You can see we're at a 45, so that's good. The markets have, corrected / cooled off a bit, which is healthy. Important support structure hasn't been broken. And I'm going to cover what I mean by that as we look at the charts. But 45 is good. We really want to be taking profits. We're in this last green bar here. If we look at altcoin season, we still have a ways to go. Altcoin season is when we're in this blue line. And you can see that Bitcoin dominance is still very high. It represents almost 60% of the entire market. For an altcoin season to happen, we need Bitcoin to be way down and Ethereum to be way up. If we look at crypto ETF data, after we've had, a bullish pretty much week, we have had outflows that has been increasing for the past 3 days. We can see we had an outflow of over 14 million in Bitcoin, over 59 million in ETH on the 14th. Then we had 121 million plus in Bitcoin outflows, and then 196 million plus in ETH outflows, and now 273 million in Bitcoin, 253 million in ETH outflows. Okay, so as we're in a bull market, you're going to see this going up and down. But as long as we're, continuing to trend upward, that's good. And now let's get into the chart and see how things are looking there. Starting off with the S&P 500, we're still at all-time high levels with no signals of showing that we're slowing down really, especially with interest rates probably about to drop in September, which we're also going to get into. We have the Dow Jones Industrial Average consolidating near all-time high levels, right? We have the NASDAQ still at all-time high levels. And we even have Apple finally back above its 62 and 200-day moving average. And it's actually trending upward. Okay, now if we look at Bitcoin, we can see we corrected from 123 down to 113. And, people are kind of getting scared. But guys, this is really, really healthy, okay? And I'll tell you why. So right now we're on the weekly chart. But if we look at the daily, we can see that this level right here was strong resistance. Resistance means it was a ceiling it couldn't break through. And we know that if you've been watching my videos, the market likes to operate between ceilings and floors. So it was a ceiling here, it couldn't break through. It's like it hit the ceiling and got shot back down. Picture you're jumping up and you're trying to, get your head through the ceiling, but the ceiling's too hard. So you kind of just hurt your neck and come back down to the ground. It did it here, did it here, it did it here, it did it here. Now, finally, it had enough power to where it jumped through the ceiling and exploded, right? If I get rid of this, now, eventually, what a healthy bull market looks like is if instead of this being a ceiling, we want this to come down and test this as support. Like we want to come down here and we want to be chopping around here so that way it can create a strong floor so that once it jumps through it, its feet, picture trying to jump out of quicksand. Like you're not going to get anywhere, or even just sand. You don't have a lot of power. But if you jump off of, a floor that's not going to break under your feet, you can jump a lot higher. And if you haven't heard, there's a phrase that I use all the time. The longer the base, the higher the chase. The base is the floor. The chase is how high it goes up. So I wouldn't be surprised if we came back down to 108, 109, 110 level, consolidate there for a bit before we actually took off and hit our target of 140K Bitcoin towards Q4. All right, so the fact that this is correcting is very, very healthy because a fence that goes up fast falls down fast. And in every single crypto bull market, we always see gut-wrenching dips from Bitcoin and Ethereum and altcoins, 30% or more. If we look at ETH, same exact thing, guys, same thing. This was a ceiling, this was a ceiling, this was a ceiling, and it was a ceiling here for a second, right? And if I put that line for you here, the Ethereum was ranging through this range for a while until it finally broke out, right? It finally broke out and we almost got to previous all-time high levels, like just right under it, literally right under it. All right. So this is a very healthy correction. So I wouldn't be surprised if we came back down to 4K and we just kind of ranged on it for a while. Longer the base, the higher the chase. Before we took off and then we can blow through this. And eventually, before altcoin season, I wouldn't be surprised if we turn this previous all-time high of 4,800 5K, or blow through that, come back down and test it as support around right here, right? Before we take off and start and make our way into uncharted territory, and ETH starts to hit all-time highs, which is really going to kick off the altcoin cycle that we've been waiting for so patiently. Same thing here, guys. If we look at this was a ceiling that we were having trouble breaking through since December. Bounced off, came way back down, bounced off, came way back down, almost came up, came back down, and we finally blew through it, came back, and then we tested it as support here, and we tested it as support here, and we are back within our trend line that we've been in since 2020, 2021, right? So eventually we're going to start seeing these kind of moves, right, up into this trend. It's not going to happen overnight, but it's good that we had 2 retests right here, because that's just testing the base. It's like it's testing out that floor to make sure it's strong enough for the market to jump. And back when I was trading Forex, they used to say when we were learning, no retest, no entry. So we have a break, we got a retest here. We got 2 retests already. So the more retests we get, the higher, right? It's kind of like when you're jumping, right? You kind of getting your feet set, testing the floor before you actually jump. The market's kind of doing the same thing, So everything I'm seeing is healthy. These corrections that I'm seeing is healthy. Now, if we break structure, same with the Bitcoin chart, same with the ETH chart, if we come down and then we come up and test this as resistance, and then we have a big red candle print, okay, now that's cause for concern. But we're just testing this as support, staying above it. So that's what we want to see for a healthy, sustainable bull market. And guys, this is the Bitcoin dominance chart. If I zoom out and we look at the weekly, these red lines are the halvings for the Bitcoin halvings, and we always see the altcoin cycle after. When this drops, that means Bitcoin dominance is dropping, which means liquidity is flowing out of Bitcoin into other altcoins. This was the altcoin season back in 2017. This was the altcoin season back in 2021. And if I zoom back in, we can see that we had a drop 11%. Bitcoin dominance dropped 11% back in January, but we recovered, right? We had a little mini altcoin season there. And then now we had a drop 10%, right? So we haven't had a drop this big since we had the drop here. But hey, this one's different, right? How is this one different? Well, we have a cross of our 62 EMA, right? And if I zoom out and go back over here, when we had altcoin season here, we had this cross, right? This isn't a guarantee that it's going to happen after the cross, but when you're trading and you're investing, you want to invest with the probabilities, right? The more probabilities you can stack in your favor, the higher your conviction can be. And, that's how you win long term. And if I zoom back out here, same thing here. We had a cross where the 62 was under the 200, right? We want that under the 200, because when the 62 is above, that means Bitcoin is winning against altcoins, and it's not an altcoin season. So going back here, we have a cross right here, right? That's really, really good. And then also, unlike this one, where it just broke down and came back right above it and we continued our way up, on this one, we broke down, we came back and we retested it, we got our cross, and we had some nice big red candles print right here. So it looks like this is an actual confirmed downtrend, because we have a high here. The definition of a downtrend is a lower high and a lower low. Same uptrend, higher high and a higher low. So we have a high here, followed by a lower high here. Then we have a low here, followed by a lower low here, right? And we are on the daily. We do want to see this trend confirmed on larger time frames as well, right? When you look at small time frames, you're just seeing the trend change, not it confirmed yet. Right? It's kind of like, I always compare trends to ships. If you are driving a ship and you have this big ship, once you turn the wheel all the way to the left, it's going to take a while for that ship to turn, right? But you can see under the ship, the rudder turns immediately. And that rudder, that small rudder, small in comparison to the ship, is still huge, is the lower time frame, right? So you see it move on the lower time frame, but you won't know until the ship actually follows. Because even when you're driving a plane, you're always having to course correct. So the ship rudder is going to be turning a little bit here and there, But once it's turned for a long time, you'll see a trend reversal on the long time frame because the ship will actually start to go a different way. So like if we look on the monthly chart, it looks like just like a regular old dip. We don't see a trend change versus when we look at this uptrend, you can see the higher highs and the higher lows. You have a low here, you got a high here, got a low here, got a high here. But you see what I marked on the small time frame, it just looks like a little mini dip. So we want to see this confirmed on the high time frame, but we're already starting to see the writing on the walls by looking at it through a small time frame. Hopefully that makes sense. And lastly, guys, just looking at the ETH to BTC ratio, we're still in an uptrend. Got a low here, a high here, a low that's higher than this low, a high that's higher than this high, and we're still making our way up. And if we zoom out here and we look at the weekly, right, we haven't, now, just like I was talking about on that ship, right, now we've seen the ship actually turn because we can actually see the trend on the weekly time frame. However, if we go to the monthly, it's not as clear yet, right? It just looks like it went up one time, but we still want to see a low, like we want to see a big dip on this high time frame, and then we want to see a big move so we can actually confirm it. Because you see when I mark it here, it's not as clear as it is like here, 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 and here, right? But we haven't had a move this large literally since 2022, right? So it's a really good time to cycle your Bitcoin profits into ETH because, you know, Bitcoin's already made its largest move. Its large move. I'm expecting it to go to, 135, 140. But Ethereum is still, I'm guesstimating to give you a 2 to 300% return. Now, guys, I've been talking about the Federal Reserve all year. And a few weeks ago, we talked about how the Board of Governors voted against Jerome Powell for the first time since 1993. And, we have our next FOMC meeting September 17th. And here is the rate cut probabilities. It's an 83% chance that rates will get cut, probably 0.25 basis points versus 16% that they're going to stay the same. Guys, the Federal Reserve, the president, and the Federal Reserve's own business partners is at his neck saying, hey, dude, lower rates. So I doubt that he's going to just continue to go against them, go against the grain. It is possible, but like I said, you want to invest with probabilities. And it seems like the market's already pricing this in. But once it actually happens, just because of, going through the pandemic and everything that we went through as a country, once it happens, I am expecting a pretty nice pump. Okay, so I'm expecting September to be a pretty bullish month. It's probably going to pump going into the meeting, and after there might be a dip after, buy the new rumor, sell the news, but I'm still expecting altcoin season Q4, Q1. And just in case this is your first time watching the channel, just to explain the significance of rate cuts, when they lower interest rates, it's the price of money for when people are borrowing money to get a car, to get mortgages on a house, loans for their business, anything, right? So money gets cheaper, more cash moves around, and the extra cash often pushes asset prices up. So just to give you a step-by-step, lower rates makes loans cheaper. Banks lend more, businesses and people borrow more. More borrowing means more cash moving through the economy. And also it does something psychological to people. Once people are borrowing money, they feel like they're rich. Even though they didn't earn it, they still have it. So they start to spend more than they make, right? And then when interest rates rise, they spend less than they make. And this represents a cycle in people and in institutions, okay? So after that, more borrowing means more cash moving through the economy. Investors use that cash to buy assets like stocks and crypto. More buyers with more cash usually makes prices rise. It's simple supply and demand dynamics. Here's another thing. I think Trump is really trying to pump crypto, guys. Like I've been saying, he's made like 60 to 80% of his net worth in crypto. Him and his wife launched a stablecoin. He's has his World Liberty Financial. He has his NFT collection. He's doing a lot of things in crypto as a president. I told you guys a few weeks ago about how they're making it so that your 401k's can get invested into crypto. Guys, just to cover this, the 401k market size is between $7 to $8 trillion. Okay, if just 1% of that gets allocated into crypto, that's $80 billion in inflows. Okay, and remember, this is not just $80 billion that's going to go in and out. When your 401k gets invested, people keep their money in their 401ks until they retire usually. So that's $80 billion in sticky capital, okay? Not just like, invest, wait for market to go up, then sell. All right? If 10% gets allocated into crypto, that's 800 billion, guys. The crypto market cap is around high 3 to 4 trillion right now. All right. And if you compare that to, what we're experiencing currently with ETF inflows, right? And we know the ETF inflows has been leading the bull market, right? It hasn't represented all the liquidity, but it's making people excited. Total spot Bitcoin ETF inflows since launch has been 52 to 55 billion. And then total spot Ethereum inflows since launch has been 12.7 billion. So combined, that's 65 to 68 billion. So as you can see, 401k's, if just 1% is allocated to it, it's going to be more. And you have to think, once people see their 401k's going up and they see it's mostly because of crypto, they're also going to invest their own money on the side as well. So it'll be more than just whatever is invested through the 401k's. So just 1% of 401k money equals more than all ETF inflows since the launch. And a 10% allocation is 10x more than all ETF inflows. Okay, now for the crazy part that I was talking about at the beginning of the video. Guys, the Genius Act is going to cause the market to pump so much. And I'm going to talk about it right now, and I'm going to kind of point to history and show how this thing has already happened. So under the Genius Act, a bank can legally create a digital dollar, which is a stable coin, as long as it's fully backed by U.S. treasuries or cash. Keep that in mind, treasuries, which is government debt. All right. This is going to cause like a crazy multiplier money loop, right? So how stablecoins work, once you buy a stablecoin, like you go and buy USDC, there's the stablecoin dollar and there's still the regular dollar. So it's almost like $2 for every $1. Okay. And they can both be invested, right? It's like the same thing with gold. Like back in the day, you take your money to the bank, they give you an IOU. You still have the gold that can be traded for whatever. And you still have the dollar that can be traded for whatever. It's essentially a way that they're going to be printing money, right? They always find a new way to print money so that people don't know and worried about inflation. This will increase inflation. And if you're not investing your money, you're going to lose a lot of money, okay? Because there always has to be a loser. And when inflation happens and the purchasing power of your dollar decreases, you want to be putting your money in places where it can appreciate more than the inflation rate so you don't lose money. So I'm going to go through this. Imagine you have a business. Let's call it a supermarket, right? A supermarket takes out a $50 million loan from a bank. Let's call it Bank A. Now, Bank A gives them the money, and then the supermarket takes 10 million of that, right? They take 10 million of it and put it into Bank A stablecoin. And then now the bank loaned out money, and then now the businesses is redepositing it back into the stablecoin. And you're probably thinking, well, why would they buy the bank stablecoin? Guys, banks are going to be creating so many incentives. Like they might lower the costs on the interest rate if they have a certain amount of their account in their stablecoin. They'll offer them maybe some credit card points with the bank, all kinds of incentives and rewards. They're going to get creative like they always do. They're going to do whatever they can to make sure that they're buying their stablecoin and not another bank's. I guarantee it. So now that $10 million in the stablecoin is now circulating like fresh money. And it literally came from the loan. It came out of nowhere. I don't know if you think that's crazy or not, but that's crazy. You extrapolate that across trillions of dollars. Remember, I said that the Fed's going to be lowering rates most likely. We're probably going to get 2 rate cuts by the end of the year. Definitely some rate cuts next year for sure. Inflation's down. So you're going to have a lot more people borrowing money while banks are also like doing this whole stablecoin thing. And guys, this is not new. There was a dollar war hundreds of years ago. I forget the actual date. But before the US dollar was declared legal tender, banks were issuing their own version of the dollar. And the one that won was the US dollar, but it was originally called the greenback. Like that's why people call them greenbacks. So now this one's different because back then they were issuing their own dollars and they weren't like having to be backed by anything. They were just issuing their own dollars out of thin air. With these, they have to be backed by U.S. treasuries, which is going to increase liquidity into the United States, which is going to increase the United States reign. So the only thing I'm waiting to figure out, I need more data is, are all these stablecoins just going to be allowed for all time, or are some of them going to be deemed illegal and a few of them are going to be considered legal tender? because whatever is considered legal tender, people are going to accumulate it happily or unhappily through hell and high water, because if they don't, they'll go to jail, because whatever's considered legal tender, they have to pay their taxes in that. And if you don't pay your taxes, you go to jail, you get taken away from your family. That's everyone's biggest fear. Okay, so just to go over this again, Bank A's loan already created new credit, right? New dollars in circulation. This came from the Federal Reserve, right? They issue this debt, they give it to banks, U.S. Treasuries, and now when part of that loan gets recycled into the bank's own stablecoin, the same dollars are tokenized and can be reused in payment, trading, and settlements, guys. Okay, so if the bank uses the reserve back in that stablecoin to buy government debt, treasuries, then the loop closes. So the bank's going to create this debt, the loan, the customer's going to put it into a stablecoin, and then the bank is going to reinvest the reserves into government debt. And all this is going to do is amplify credit creation, and it's going to cause more demand for treasuries, and it's going to lower the funding costs for the United States. So banks win, businesses win, and the government wins. And the loser, like I said, is the person who doesn't invest their money, because they lose value through inflation, because all this money is kind of coming from nowhere. It's not funny, but it's just crazy to me. And then last thing, this is huge, guys. I've been worried about Tether for the longest, especially when the Genius Act passed and how they weren't going to possibly be allowed to operate in the United States. That can cause a full-on bear market if Tether goes away, because it's way bigger than USDC, because it's global, right? USDC is global too, but Tether been around longer and people just use it more. So Tether went ahead and hired Bo Hines, which is an ex-Trump Crypto Council executive, and they hired him as an advisor for U.S. strategy. And this is from the Financial Times, okay? So they hired him, and he was a former executive director of the White House Crypto Council under Trump as a strategic advisor for digital assets and U.S. operations. So Hines previously influenced the passage of the Genius Act, and this is basically signaling that Tether wants to be U.S. compliant. Because, I'm not going to say they didn't have any reason not to in the past, but now that there's clear laws passed, hey, if you don't follow this law, you can't operate in the U.S. They know the U.S. is a huge market for them, and they don't want to lose market share to Circle. They're bringing on someone who helped pass the law, who's part of the, Trump administration, to signal that they want to be compliant. That's huge. So Tether has 70% of all crypto trading volume. USDT is used for most of the settlement. It's used as the settlement currency for the most part. For years, regulators and critics has questioned Tether's reserves and transparency. So by moving towards Genius Act compliance with the U.S. product, they're basically saying they're going to play by the same rules as the banks. And it's going to make Tether safer, because they're going to be forced to be audited, and we're going to know what's happening under the hood and what they're doing. So yeah, that's pretty much it, guys. It seems like every week some crazy stuff is happening. And like I said, everything is aligning for Q4, Q1 to be crazy. Interest rates, 401k's, banks issuing stablecoins, all this stuff. We're seeing Bitcoin dominance drop. You guys watch the video. So yeah, with that, I'm going to end this video. I've been recording so long that it's gotten dark and I have to turn on the light. If you got value, like, comment, subscribe, share with a friend. But until then, thank you so much for watching, and I'll see you guys next week for another macro update with probably some more crazy news. See you on the next one.